Welcome to Trustworthy AI, de-risk business adoption of AI. I'm your host, Pamela Gupta, and as you know, on this podcast, we try to solve for emerging issues with AI adoption because, as we know, it is a very complex area, and we want to make sure that we, as businesses and organizations, maximize the potential of AI. So, how do we do that? We take a look at some of the current issues, some of the upcoming issues, and some of the necessary conversations which may or may not be happening and try to solve for solutions. Today, I am talking with Ernest Nicholson. Ernest Nicholson brings a very strong and a singular perspective on a question that most AI risk conversations are not covering or asking for. How is governance set before capital commits to an AI infrastructure deal? As managing partner of Zephyr IDP and CEO of SKEET Global Services, Ernest has built a framework for institutional de risking that was submitted to the Basel Committee on Banking Supervision as recently as last month, was it? April 2026. And it's a submission as a practitioner reference framework for AI infrastructure specialized lending governance. His work at the AI Ethics Council, which was co-chaired by Sam Altman from OpenAI and John Bryant, deepened his conviction that the AI governance conversation must start earlier than it is happening now and has requires a further reach. Ernest was a appointee in the Clinton administration and a senior executive at Halliburton KBR. In this episode, we have an opportunity for covering directly and hearing directly from a practitioner who is shaping how institutional capital approaches AI infrastructure investment at the regulatory altitude and to surface a conversation that is happening privately in boardrooms and lending desks, but maybe not in public yet. Welcome, Ernest.
Pamela, thank you so much for having me here today. It is a complete pleasure to be here and to be sitting with you to discuss these issues. And I'm really looking forward to our chat here today. Thank you for having me.
Yes, absolutely. Thank you, Ernest. So let's start off with what you have described at the AI Ethics Council that I've had, as I mentioned, you co-chaired with Sam Altman and John Bryant. Um, as deepening your conviction that AI governance must start earlier and reach further, particularly for underserved communities who are most exposed to the downstream consequences of poorly governed AI infrastructure. So, your framing of this
Mhm.
is these communities are not just stakeholders to be managed, but are co architects. And with your combined experience of 3 decades watching capital move into infrastructure at the wrong moment as a presidential appointee to the Clinton administration and as a senior executive at Halliburton KBR and also as a platform builder at SKEET Global that produced Zephyr IDP, which I really want to go into more. But the first question is, where does your mantra around agency and ownership sit around this one?
Sure enough. Well, one of the things that, I had an opportunity to work with some really outstanding folks and helping to uh, uh, build out the operations of the AI Ethics Council while I was at Operation Hope, to where we built the committees and their 12-month rollout plans and their deliverables, quarterly deliverables. et cetera. So we had a real opportunity to work with folks from, as you may mention, from OpenAI, but others uh, uh, that had a keen interest in, speaking about AI ethics and how it actually became real, not only for these corporations that are using AI, but also in the communities where much of this infrastructure is built, which is my background. Throughout my 30 years plus of experience here, what I've been able to clearly see is that the highest leverage moment in any of these infrastructure investments is at that first conversation. And I clearly was able to see that though the many of these communities where the infrastructure is actually being placed aren't in those conversations. And so one of the threads that stretched through my experience is surrounds my mantra of agency and ownership. Agency in such that people have the skill sets, knowledge, capabilities, and ability to be able to participate in outcome. They're agents in work that's surrounding them and work that's affecting them. And then ownership with regard to being able to own the outcomes because you participated in them early, and it's not just something that was happening to you or these were things that you were clearly involved in. So you had agency and ownership when it came to, or when it comes to, these types of projects, and those that are successful were the ones where these communities were included, and there are specific and very real things that can be done where the communities are included very, very early in the conversations. And it de-risks these projects because once you step into these communities, Pamela, and you stop guessing at what it is you think they may want or what it is that you think they may need, and you actually ask them and you actually engage them in a way that is meaningful, and not only meaningful and we'll talk more about this as we begin to talk about the pillars inside of the IDP, but the results are auditable, so folks have some real skin in the game on both sides of the issue. So when you start doing those kinds of things early, when you talk about projects that are multi-billion-dollar projects, when you start talking about the cost of doing what we're talking about with agency and ownership in pillar number 6 in community and governance, we're talking about fractions of dollars and in order to get this done and get it done right. At the end of the day, and you'll hear me speak to this as we talk more, 30 to 50% of the data center infrastructure projects here in the U.S. right now are on hold for one reason or another. Many of them are on hold because of uh, uh, communities that are deciding they may not want to do this. So, we're talking about hundreds of millions of dollars, billions of dollars here that can be de-risked if we just decide to do this early.
Thank you. So your LinkedIn post that you published early April framed this core argument, right? That risk is set before capital is deployed,
Right.
not after. And would you like to add, walk us through that thesis and what it means in practice? I mean, I understand what you're saying from, taking a proactive approach. And when you do that, when you take a proactive approach, you're going to cut down on what it needs, what has to be retrofitted or what has to be done reactively and adds cost and adds complexity. Love to hear if if you want to add more to that. How that risk is set before capital is deployed.
Sure enough. Well, listen, Pamela, the thesis is this. We don't have a technology problem with AI infrastructure. We've got all the best technology in the world. This is plain and simple. And it just keeps getting better. We don't have a capital problem. There is plenty of capital to be invested in these types of projects because at the end of the day, they they they're very viable and they're very lucrative. So we have plenty of capital. What we have is a design problem, and it's most acute at the first investor conversation before these term sheets, before a single dollar is committed. And it's at that moment and only at that moment the mandate constraints, the leverage limits, counterparty protections, power entitlement requirements, and community governance considerations, they're all still open for negotiation. So at the beginning, that all of that is wide open. And our thesis
Oh,
is that afterwards, they're not. So once those term sheets are signed, you're locking in that risk. So what this means in practice, again, is like 30 to 50% of 2026 planned US data centers are facing delays or cancellation right now for a number of things that are included in the six pillars of the Zephyr IDP: transformer shortages, power failures, community oppositions, counterparty default. Every one of these failure modes, Pamela, is visible and addressable before the capital commits. And none of them
okay.
currently are required to be addressed except under what we submitted to Basel for these guidelines governing the banks and financing these projects. And that's where we see the gap.
So, thank you. So, your the Zephyr IDP
Hmm.
is built on six pillars, right? There's demand, power, and entitlement, right? Counterparty technology, capital, Slack, and community and governance. So, why these six? And I know you covered some of them. Is there any other factor out of these six that can cause a deal to fail?
Sure enough. Well, I have to admit, I go back to I'm an Army veteran, so we turn everything into acronyms. DEPCOT C2 are those six pillars, and you hit them correctly. You know, the reason that we did the six pillars is because they clearly are associated with each stage of a project and the questions that need to be asked and answered before the project is led. I'll give you an example. Inside of pillar number two in power and entitlement, right now, there are $13 billion of Blackwell GPUs sitting in crates because there's no energized space to deploy them. The transformer lead times are running about 100 weeks or more, right? So a data center without confirmed power is not an asset, it's actually a liability, right? That's business school 101. And that failure mode is entirely preventable at the pre commitment stage, Pamela. So if you're following the pillars, each one of those pillars in the pre commitment stage, you're clearly understanding that. And like right now, the second most common failure is pillar one, which is demand validation, right? And it's the difference between a contracted investment grade offtake and a speculative projection of who your tenants might be. And that's the difference between a project that compounds and a stranded asset at the first lease cycle, within a single lease cycle of your GPUs. So these pillars, if answered before pre-project, before commitment, helps to answer these questions that are clearly stopping the project stopping these projects in their tracks, and it's very close to stranding many of the projects that are out there right now.
So, as you can imagine, the biggest and the highest interest for me is the sixth pillar, which is community and governance, right?
Right.
For the community and governance pillar, and it's anchored in agency and ownership,
Hmm.
right? It sits alongside the financial discipline pillars, right? I have not seen that, and I really want to delve more into that, which is unusual for a framework engaging at the institutional, capital, and Basel level, right? So, what makes this pillar essential to how Zephyr IDP de risks AI infrastructure? And why does it belong in the same conversation as capital, slack, and counterparty risk?
Well, one of the things that helped me to build that part with that sixth pillar, community and governance in a finance conversation, is because that's where my career has essentially been standing on the corner of, and in those types of conversations for 30 years. It's like, how are we going to be able to deal with budgets that have multiple zeros in them, right? Billions and billions of dollars, and actually make it work inside of communities who have no idea about the considerations that go into those things, right? So it's not unusual if you spend time in those communities where this infrastructure is actually being built. So I've documented, Pamela, that 142 activist groups across 24 states have blocked or delayed $64 billion in AI infrastructure projects. Okay, I'm going to say that again. There are 142 activist groups across 24 states that have delayed or blocked $64 billion in AI infrastructure projects. Virginia alone has got 42 of them. And I'll give you a clear example. We just had our primaries here in Georgia yesterday, a county council meeting where the senior center superstars stand up and they vote in every election, and they say that they will make sure that no one gets elected if a data center permitting change passes. That's not a soft risk. That's a claim event. And you see how the intersection is starting to show itself between a community and between these dollars. It's literally a claim event when someone brings that up. Community opposition can be a project stopping, capital deploying risk that would show up after term sheets are signed because no one's asking these questions before. So agency is the ability for these communities to feel like, hey, look, they've got some real choices, right? And how this AI infrastructure is affecting their lives. And then the ownership is the freedom and control to shape these outcomes rather than simply receive them. And the way that I see them
Mhm.
on this corner between finance and these communities is that, look, they're not soft values, they're money making, money breaking types of considerations. And their design requirements that can determine whether a project achieves a sustained license to operate and whether it moves forward or not. And my thesis is that if we do these things proactively in a standardized and measured way, we can avoid or mitigate or even eliminate many of these issues that continue to keep popping up. And that's how I saw that. It's like, listen, we can put these things together and we can find solutions here. We absolutely can.
Okay, well, I'm going to switch direction a little bit now
Sure.
and talk about, you submitted Zephyr IDP
Hmm.
to the Basel Committee on Banking Supervision in April. Can you walk us through what that submission is and why it matters? Because most governance frameworks do not engage at this regulatory altitude?
Sure, I'd be happy to. Well, on April 21st, I'm really pleased to say that Zephyr IDP was formally submitted to the Basel Committee on Banking Supervision. It's a practitioner developed reference framework for AI infrastructure, specialized lending governance. So we were able to get that done. The consultation is open through June 26th, and all the submissions will be published publicly on the BIS website. Um, Pamela, what that submission does is establish IDP in the public record at that altitude of the world's primary banking standard setter before any individual market participant, meaning any bank, any PE firm, any sovereign fund, any corporation, had the opportunity to shape, co-opt, or resist it. They have opportunity. This is the standard is being built as we speak. So the lesson that I take is that from my work at Halliburton KBR, you establish the standard at the sovereign or regulatory level yet, as you recall, they work with the government, and then let it cascade down as a condition of participation instead of a bubble up. So we went directly to the BIS. We submitted on April 21st, and I'm really pleased that that's being worked as we speak. IDP was built to be the standard that precedes the deal level conversations. It is upstream of those conversations so that it can occur early.
Okay, that's really informative. Thank you. Um, I'll add something to it, right? And let's and we can unpack this maybe in a different conversation. We may not have time to go into it in too much detail, but what it seems is emerging is four governance layers forming in the public AI
Okay,
conversation right now. So what you're talking about, pre-commitment capital governance, right,
right,
which is where you're operating. Then enterprise lifecycle governance and runtime and agent level authorization and risk transfer, etc. That's the layer I'm working at.
right,
And then we're talking about the risk transfer in the insurance space, as in through underwriting and and other activities that insurance typically gets involved with. So, where do you see this architecture? What do you think of that? How do you see that um, landing in this regulatory framework that you described, right?
right.
In terms of maybe down the road, right? Do you see it evolve in this manner, right? Where we talk pre-commitment, during, and then risks underwriting.
Right. It is all on a continuum, Pamela, and you summed it up very well. In 5 years, I see this architecture looking like the infrastructure equivalent of the financial system's risk management stack. I see a layered, they're interdependent, and they're ultimately required by regulators and institutional capital simultaneously. And here's what I mean by that: pre commitment governance, like the Zephyr IDP, becomes a condition of participation for institutional financing. Then enterprise lifecycle governance, which is trusted AI, AI tips, and the framework surrounding that's where you're working, becomes a condition of operation for the regulated enterprises. Runtime authorization will become the condition of deployment for autonomous systems. And the residual value insurance, which you brought up, and the risk transfer products, they become the capital market mechanism that prices all of that governance into the cost of capital. And what I find most interesting about this, Pamela, is that the insurance market, they're already ahead of this. They're already having these conversations. The GPU cluster residual value insurance conversation, that's happening right now. And it's pricing exactly the risk dimensions that Zephyr addresses. The regulatory market, I think, is going to catch up, and the Basel submission is one step in that direction. But at the end of the day, folks that are making these decisions, they have to be able, it cannot continue that 90% of the Fortune 500 who have implemented some level of AI into their processes are having failure or failing. That can't continue. Those kind of
Right, right.
dollars can't keep flowing out of the door. So when that those enterprise life cycle governance frameworks that AI tips and others like what you're doing, when they become the standard, those numbers go down dramatically. And we begin to de-risk this system so that we all can use it and we all can benefit from it and make really good decisions. So that's where I see that's where we're headed here.
Yeah, that's truly bringing that complete holistic look on de-risking AI, right? That's taking it to a whole new level. And I love it. I mean, I think this is truly visionary work, right? Taking it from pre-commitment capital to what AI tips is allowing and brings to the table, which is no other AI governance framework does that, of how to calculate that risk and how to create that methodology from a good approach, etc., to the what is the risk mitigation and risk underwriting at the end of it. So if a board director is listening
Mhm.
and they're about to approve a major AI infrastructure investment,
Right.
so what is the one question or a suite of questions that you would recommend that they should be asking or urge them to ask before they cast that vote?
Sure enough. And they definitely need look. If there was any time that board members should be asking questions and others that are making these decisions, CEOs, and others that are making these decisions, they need to be asking these questions. I would tell the board member, you know, ask them who's in the room before the term sheet is signed and what framework are they using, right? What framework are they using and who's in the room? And if the answer to that, Pamela, is, well, our deal team is there and the framework that they're using is our standard due diligence, right? I tell them that the risk profile of that investment is already set and is not in your favor because the regular way of doing things is simply not working. We have to evolve. It has to evolve because the moment that this capital is committed, the very moment that it's committed, the governance architecture is locked in. A board approves, an AI infrastructure investment without pre-commitment governance documentation, they're approving a risk profile that they haven't actually evaluated. So that's a fiduciary question, not just a strategic one. And it runs throughout that entire continuum that we just discussed. So that's the kind of conversation that I believe we should be having, with a board member making this kind of decision.
That's perfect, and that's is not only giving a question but also the answer, right, or way to get to the answer with Zephyr, with taking a holistic approach to that governance architecture we just talked about.
Yep.
So, I'd like to conclude with asking, what is your next step? What is for Zephyr IDP, and where do you see it, in the future?
Well, I appreciate that. There's a through line through this work, and quite frankly, Pamela, I just believe that the highest leverage moment in any of these infrastructure investments, or even in your world with the enterprise investments, are these first conversations. I've seen it time and time again on Capitol Hill, in corporate offices, out in the field, that before the Capitol, before these contracts, before the announcements, we have to have some real conversations that have some framework and some standard around it, right? I've spent 30 years doing this, and when that conversation happens well, companies like Halliburton KBR exponentially grow. When they build a governance standard, that becomes the condition for participation across many different governments around the world and here in the States, right? Or even in my company at SKEET, where we built, the hydrogen production platform from the ground up, and we saw it acquired at a $10 billion valuation. Projects will compound. But when this conversation doesn't happen, projects stall, capital is wasted, and the communities where the benefit was supposed to be from the infrastructure that they're building, those communities bear the cost. So, this AI infrastructure is the largest version of this story that I've ever seen, ever. And I'm absolutely convinced that the governance infrastructure that we're building right now in this early window will determine the outcomes for the next generation. Because what's on the horizon is not just more AI. Quantum is next, space is next, and other huge infrastructure that ostensibly can make life better for many, many people. So let's do it now. Let's build it the way it needs to be built so that we can move forward without the fits and starts and the waste of capital and time that's happening on a daily basis. And I think that I absolutely believe that we can do that.
I'd like to end on that positive note. I agree with you. It absolutely is possible if we are proactive and strategic, right? And not wait for something to go awry, but look at it and weigh our options very carefully. Go it with eyes open. It's one term I coined some time ago. Trustworthy AI for intended outcomes, meaning trust built on foundation of those 8 pillars that I'd set up some time ago.
Yep.
Looking at it proactively, looking at a crystal ball, right? It's to bring that value that we can achieve with technology. So thank you so much. Appreciate the insights, and I'm looking forward to having more conversation with you, Ernest.
Well, Pamela, it's been an absolute pleasure being here with you today and having this conversation. It's one that certainly needs to be had, and I appreciate being able to share it on your platform for your audience. I look forward to continuing our conversation and chatting more with you. Thank you.
Thank you.